We've talked a lot about free internet money because that's the best way I can call this strategy. But there is one risk, one absolute risk that can happen. So we're going to go over that today. And so this week, Friday at market close, this is this is a prime example. We're going to talk about Nvidia because if you guys have been watching my videos, I've been trying to do this every week. It's something I post in the Patreon group. Shout out to all the new members that want to join Mike's live stream. Mine, by the way, this is Mike. Mike. Okay, yeah. So he's not a picture. That's Mike's really there.
I'm here.
Uh,
It's me.
yeah, but if you've been following the YouTube Shorts, then I'm posting every week what I'm doing, showing you guys how and we even rounded up, saying we own Nvidia at 120, and it's gone down. Matter of fact, it's gone down a lot. It's gone up a lot, and then right back down, kind of like we called it. I'm just gonna go ahead and say we called that one out. But still, the stock's gone down, and all we've done is lock in profits. So perfect time to talk about the one. Technically, there's two risks. One, you're going to bring on yourself, but the first and absolute most is you own the stock, because the wheel strategy, right? You sell the puts, you own the stock. Eventually, you try to avoid assignment, but things go down, right? Sometimes things just happen, and then the stock gets put to you. That's where it gets its name from. And then you own the shares. You start selling calls. If it goes up, the shares get called away. So the absolute risk is you sell a put, stock goes down, shares get put to you, and that's actually the problem right there. Is if you were selling puts not to own, but you're kind of okay with it, something just happened because you were trying to avoid assignment in the first place, but it goes down and you own it, and then it continues to go down. The biggest risk for me on that, and Mike, I know I've really just taken away this intro here. The biggest risk for me is psychology behind that, which is why we stress. Yeah, your money technically is going down, right? Home prices fluctuate as the market goes up and down, but rent still is due the same time every month, same price every month. Um, so psychologically, when you look at something and it says your P&L is red, I don't actually care about my P&L. I've detached from that so much because, side note, it really burns me when people are like, I'm up this much. Like, no, you're not. Like, until you lock it in, you can't count it until it's in your hands. And which is personally why if I ever tell you I'm up $500 or $1,000 or $15,000, that's where my stop loss is at. My P&L might say 300,000, but there's no way I'm going to come out there and jinx it and tell you I'm up this much just to watch it go down. And people get emotionally attached to that number, and I think that's the biggest risk. Is they're looking at the stock, Nvidia stock. I own it at 120 and it's down. I'm down $1,000. Like, I'm not. I don't know what you did, but I'm not. All I've done is lock in money.
Yeah.
All right. So anyway, that's what I think is the biggest risk is people getting attached to that number and really seeing it. Because if you did your homework right, your due diligence, you should have a decent mindset and a map for that stock in general. It's why I chose Nvidia. Not I broke down one the other day. It was Hyzon Motors. I don't know what they do, but it was 13 cents. Like there's a difference in why I picked Nvidia and not that one. So what's your biggest risk? Let's talk about any negatives of the wheel strategy, because we've brought down a lot of positives. I've only shown off wins because that's all we've done so far. So what's the catch? Ooh, that's what everyone's thinking. What's the catch with this?
What's the catch, right? There's
Yeah.
there's two, like you said. There's one, and there's one on each side.
Mm-hmm.
The first side, selling puts, is you can own a stock, get assigned, or sorry, you could sell a put, get assigned, and then the stock continues to drop.
Mm-hmm.
The number one thing we tell people when running the wheel is you want to do this on a stock you want to own. Mm-hmm. Why? Because this very scenario can happen. You can own an Nvidia at 120. It's down to what,
110. Yeah,
we're
fluctuating.
There. Yeah. So technically, your account says you were down. However, I'm in the same position. I think my average is 118 on Nvidia. I'm sitting fine. I don't care because I know I'm gonna make premium every week.
Yeah. So what actually have you done? Brass tacks. Now, I do have to mention that we have to pay taxes on this because we sell options contracts, not drugs. So it is legal. So we do have to report it. So what are you taking to your accountant right now? Because it's certainly not my shares are down because you haven't sold any shares yet. Your
Right.
accountant doesn't care about the shares you own. They care about what you've locked in. So what have you locked in so far? Locked in a bunch of losses or
No, I've only locked in profits
okay.
from
So
the premium, right? So
right.
that's a
Mhm.
profit every week. Um, and that's not theoretical, right? That's
Yeah.
I'm collecting that money and it goes right in my bank account every week. Like,
Yeah. That's to say, like that's something you have to take to your accountant. You can't just say I own this, it's down. You're not writing that off. As much as
no,
Biden did try that unrealized taxing unrealized gains, I'm surprised those words ever came out of anyone's mouth.
yeah,
Like you have to be stupid, not even politically, but just like to think how much of a cluster that would be to tax unrealized gains.
yeah,
Like,
that'd be
oh
bad.
man, that
Like,
paycheck the next year would be big.
yeah, so that's risk one, right? Is
Mhm.
getting assigned shares and the stock continues to drop.
Mhm.
How much of a risk? It's basically what kind of stock did you buy? Did
Yeah.
you buy Nvidia or did you buy this 13-cent stock that's going to go to zero? Right? That's really the risk.
Yeah. Now, real quick, because I guess just full disclaimer, this nukes could fly off. You could be wearing sunglasses at 11 p.m. There are things that can make Nvidia, Google, Apple, Tesla, Meta all go down or to zero. It's not off the table, right? Like you say with AI, the chances are greater than zero, but in my opinion, fractions of a decimal. Like
Yeah.
we're way out there. So just to fully disclaimer that, because some people will probably do their due diligence and think, you know, uh, helicopter drones delivering your one slice of pizza is going to be a thing, and then it's not. And but anyway, they fully believe this stock. They're all for it. And then it just gets scrapped.
Yeah.
All of a sudden, hydrogen is the thing. And then all of a sudden, EVs are out the window. So don't forget your due diligence doesn't mean anything. You can read how to wrap a turd in tinfoil and make it shiny. It doesn't make anything any better. Like your due diligence might just suck. So there's a lot of human flaws in everyone's decision making process, and a part of going through this or making this maybe a career path or a side income is working out what your flaws are and how much bias do you have towards that particular one, because that can get you in trouble.
Yep. Indeed.
Truly believing that Heisen Motors is going to go from 13 cents to $130. Someone out there probably does. you know,
Yeah.
they may work for the company, but
Yeah.
you go all in on that. You might have thought you did your due diligence. Turns out you just sucked at that too. So that, I know the second risk you're about to bring up,
Risk number
and
two.
but I'm going to go ahead and say this is a risk people bring on themselves.
Okay.
Okay.
Lay it on me.
Okay, so we own Nvidia at 120.
Hmm.
Uh, I know it's 118, but we're rounding up. It's 120, and we're not even gonna pretend we own it at much cheaper, because technically you do. Out of pocket, because technically the amount you collect, the premium is, like last week I collected $1.43 per share, so it's $143. So technically that takes off $1.43 right off the top. It's no longer 120. It's 118, 67, 57.
Yeah.
Yeah, 57.
Right.
So that's my average price. Technically, I could sell the 119s, collect a little bit more premium, and if it shoots up, I make a little bit, or it doesn't, and I just keep that premium. I keep moving forward. That's how you bring your average cost down.
Hmm.
Um, but let's just pretend we're selling the 120s. The 120s just aren't worth that much. So it's sitting at 108. I'm gonna sell the 113s. And what did I essentially just do to myself?
Potentially locked in.
Even Mike can't say it.
I said you potentially locked in a loss.
Yeah, because that contract, when you sell a call, you're agreeing to sell your shares. That's why your shares get called away. So you're basically saying, I have no problem selling my shares at 113. Someone's going to say, I don't mind buying your shares either at 113, and they're going to pay you for it. And if it shoots up, because this last week we had the markets are volatile, they're selling off. We're kind of going through a correction, and we saw a rip your face off rally. And I don't want to get ahead of ourselves and get into that, because we are going to cover that. But whoever bought that one probably thought they were doing good,
Hmm.
and probably saw a lot of panic around that time when it shot up to 122. Even though I had the 120s sold, I didn't worry a single thing. But that's the second. I don't know if I call that a risk. I call that I don't want to say stupidity. There's a time and place because I've done it.
Oh,
You
I
know,
do it all the time.
yeah.
I do it, but I also have a plan to get out of it.
Yes. Because it's not as black and white as some people think. Because you sold the 113 calls and it shot up, doesn't mean you have to. It means if you let that thing go, yeah, you're going to. But there's going to be some management now involved.
Yeah.
So yes, if we're just keeping it dumb, essentially, you're fine with locking in that loss. And this is where patience pays a lot more. Not bag holding. Patience and understanding your original plan from the beginning is very key at that point. And this is the times it's all fine. We've done nothing but collect money, so everybody watching and following along, all they know is the gravy train. That's literally it. So it's times like this that does test your patience. You find out what your emotions are, where they lie, because when everything's at bay, like it's no one's worried about the boogeyman at noon at lunchtime. You know, it's not until they're laying in bed and all the lights are off. So
Yeah.
until you get to
Yeah.
that, you don't know where you're at. So go ahead.
Yeah. I was gonna say it's interesting in our group, and we're going through this volatility right now.
Mhm,
Everyone's been so used to the gravy train of everything just going up that
mhm,
we've been collecting premium every week, right?
mhm.
There hasn't been for a while. There hasn't been an off week.
Yeah,
So now that we're having off weeks, people are starting to like, whoa, what is going on?
yeah. But and that's what blows me away is where the emotion does come from, and it's originally it's just based and rooted into being attached to a P&L because
Yeah,
they're looking at their shares now every week for the past who knows how many weeks they've watched their shares go up and the premium they lock in, so they got the best of both worlds, and
right.
now they're seeing the shares go down, still only locking in money, right?
Yeah.
We're not getting tax write-offs here, so all we've done is lock in money, but it's like they quit burning it from both ends, and all of a sudden it's like, hey, where's that other light at? Well, what's going on? This wasn't supposed to happen. I thought things only went up.
That's right. That's right.
Uh, so
Yeah.
how did you manage this whole week?
So I had thought about whenever it had popped up above my I did roll once this week because
Mhm.
it did roll way past my the strike price of it, and I forget what it was. I think I had it
Mhm.
at 116 or something, and then it shot up to 120 something or other, and I just rolled
Yeah,
it up. I just rolled it up $1 and out 1 week,
mhm. Gosh,
and
who taught you that? Side joke. When people get emotional, I don't want to hijack this. It's just I see this stuff, and then there's one member I think finally calming down, but it's like it shoots up, and they think they need to manage it right then and there. Right, you have Friday till expiration.
yeah,
It's Wednesday, like, and then all of a sudden they're like, I gotta roll. There's a rip your face off rally that absolutely sends it. You sold out of the money calls that are now in the money. Gamblers that bought it are absolutely loving it.
yeah,
But it ended up panning out like a slot machine that said jackpot. No coins came out at the bottom, and the clerk came and told you that was a false jackpot.
yeah,
But making that emotional decision, they're like, I gotta roll 4 years out, $126 up. Like because you can roll up and out, which means you're going to move the strike up. It's going to collect less, so you got to give it more time value, which means you got to go further weeks out in expiration.
right,
And then they make emotional decisions, but now you're sitting on that thing for how many times?
yeah,
And that was one of the crucial lessons I think we had in the beginning was just I roll it one strike up like an inchworm. Just start working your way up. If you're
yeah,
in the money, start working your way up. That's all. 1 week, one extra strike. It pays for itself. You collect some money outside of it just looking like an Elon rocket ship, like the vertical part's not going to happen. But if it's going up, that's a fast way to get. It's a pretty maybe not fast, maybe a medium way just to get out of it and still make money in the
yeah,
process. Mm-hmm.
yeah. I mean, well, ultimately, I might have to go out 2 weeks,
Mm-hmm.
but and I'm not collecting as much. However, I'm still collecting money, and I'm just giving
Yeah.
myself time and extra profit if for some reason they did get called away, early.
Mm-hmm.
So
Yeah. So the one thing that sucks is that because everyone always asks this, like, what are the rules on early assignment? And there is no rules. The
no,
Options Clearing Corp just says they draw a line, say, hey, get these off the books. That's that, whether you made the cut or not. It can't happen. I've probably had it twice. And that's because I can remember one time. I'm just thinking maybe there was another time, but it's very rare that early assignment does happen outside of being you're $100 in the money, like you're actually deep in the money.
yeah,
Uh,
I think in 3 years I've had it happen twice.
oh, really?
Yeah,
Yeah, even because people were asking me about that, like, oh, early assignment, and it was Meta, and they were surprised because I was like, no, Meta can cover that ground. That's not in the money. In the money is not like we're not drawing a line at $5. We're talking about market makers being delta hedged and things being accounted for. If that stock can cover that ground inside of an hour, you're not really in the money. Yeah,
mhm.
it might be in the shaded area of the options chain, but you're not deep in the money. You're still in the worry zone. Right? You're still Don Kaufman from Theo Trade. He says on the dance floor. If you're still on the dance floor, like things are still lively. Like you're probably not going to get that early assignment.
Yeah,
We're talking the ones that are old folks home. They're not doing anything. They're
right,
just sitting there.
right, right.
Uh, all right. So you rolled it. You gave it 1 week. Rolled it up at one strike. So what? Probably the 117s, and
Something
then
like I forget what it was, but yeah,
here's what makes that so important and so cool, and why I talk about it because it's already panned out. So you already know the answer. When things push up like that, when you go from out of the money to in the money, what just happened to that stock? If you're doing it correctly, right? You're not selling $2 out of the money. You're not selling a 40 delta or a 38 because we sell in the teens, probably 20 delta if I'm bullish. Uh, by the time that contract becomes in the money, that stock's probably somewhere on a lower time frame, pretty overbought, looking for a pullback. And when you
yeah,
sell weeklies, this is the importance of options contracts and why everybody sucks at them. Is because when you go buying an options contract, you just have no idea how much time a day actually is. Because, and again, when that stock shoots up and all of a sudden you're in the money, all you need to do is pull over or pull back even one day, and things are looking very different. That theta kicks in, it pulls back just a little bit. Uh, all of a sudden, you're not so in trouble anymore.
yeah,
So that's why I like rolling it out. Now, in Nvidia's case this week, it shot up to 122, went right back down to 108. So you rolled it to the 117, you collected some money, and it's already out of the money again, just off
yeah,
of a pullback.
yeah.
Uh, so why didn't you just panic? Roll it up to like a 125, 3 months out.
Well, I want to be able to continue to earn income. So the farther out it goes, the less income I can make.
Right. And man, I don't know which way to take this. I guess let's just go this route. When you get into these scenarios, because the one thing they saw me do if they're following along was the premium I collected on Nvidia, I bought Palantir shares with. I called it free shares, but that's just kind of what happened. I own Nvidia. I use Nvidia to pay for Palantir, and this really only is a worry. The whole premise of this video is kind of only a worry only in the beginning, because you have one ticker, one contract. Once you have this going on in a few, you have one that needs management, like, all right, what's up, let's deal with this crying kid. But you have all the other ones doing their thing, so the income just stays coming in, and it really eases the emotions.
Yeah,
uh, and then, so what happens? Is it really over? Because technically, let's say it stayed above, and your shares get called away. It's at 120, 120, 122. Let's say we bounce in that range. That's it. Your shares get called away at 116. What are you doing the following week?
I am selling a put, and I'll be more aggressive. I'll sell a put, a little more aggressive.
Mhm.
I'll collect more premium, so
Mhm.
hopefully I can get the shares right back close to where I sold them at, and it's no loss, and I collected way more premium.
Yeah. So if it's just a few dollars up, what you'll end up doing is selling the 116 put. You were already fine with owning it. You sell the 116 put. Now you'll collect more premium for that. Now puts usually pay more because the volatility emotion usually is to the downside. So on that part, you'll collect a little bit more just naturally, even if you're $5 out of the money on both sides. So you'll collect a little bit more premium, but then you're right back in at 116 on a pullback. So
Mm-hmm.
nothing ever. There was a quick little speed bump. The Olympics are going on right now. I don't know if anybody's watching the gymnastics part, but it's kind of like when you see someone doing a giant and a release move. So it's a giant's when you swing all the way around the bar, and then up at top they'll let go, do a flip, and then grab right back on the bar. It's essentially what you're doing. You let go of the shares for what, a week or two, and you start selling puts. If you never sell, if you never get assigned ever again, what happens? You're not in a stock. You use that cash and you collect money every week still. Nothing's
Mm-hmm.
actually changed. We're
No.
just using the excuse of those 4 letters to collect rent.
Right. And I think that's where we're taking the emotion out of it, and realizing what you're doing is so powerful, because I think that's what a lot of early traders do. Is they're emotional. They're emotional about the shares themselves.
Mm-hmm.
They have them. They don't want to let them go. Okay. Well,
Yeah.
you can always buy them
Why?
right back.
Yeah. Yeah. Is it your kid? Yeah. Like, why don't you want to let it go? Like, who cares? And the stock market is, as much as this might sound like tinfoil or anything like that. Sure, it's a part ownership of the company, whatever. That's hilarious. You're not actually, you don't have any power. You're not going to go in there and fire anybody. You're not making any actual decisions. So occasionally there's a vote. You can do that. But how many of you guys own shares and even participate in votes? Because I'm willing to bet a lot of people don't. Maybe I'm wrong. Maybe everyone's just going to show up in the comments, tell me how excited they are to go vote on the next shareholder meeting. But that being said, it's just an excuse to move money around. You think you actually bought NVIDIA, you have your money attached to 4 letters. Okay, sometimes 5 letters if the people are weird. But like Ford's 1 letter. The ticker is going to be 1 to 4 letters, and that's what you bought. A few letters in the alphabet. Look at your little alphabet soup when you were in the 3rd grade. Okay, imagine you just bought that, but you get to make money off of it. You dunk your spoon in there, made a couple. You grabbed 4 letters. There, I'm going to use that one. That's my vehicle to make money on. Like, if it's now an investment account, you probably want to pay attention a little bit more. You want to at least know what letters they are, because that's the ongoing excuse as to why that thing will move. But coming down to the brass tacks of it, it's just you got money attached to 4 letters. Doesn't mean anything else. And that's all the other institutions. That's what they're doing. They're just using you guys to make money. They're pumping out that news to drive, I guess, the cattle, the herd, one way or the other. But that's it. I think once you come to that realization, then it doesn't matter when you let the shares go,
Yeah.
because you're going to take that same capital and sell puts. So the capital you have out doesn't change. The money you make still comes in every week. So what does it matter if it's in your little bin or not? Yeah, you call it the bullpen. Your little bullpen of shares, your little holdings. What does it matter? Maybe it collects now. I forgot I did take on the new identity of Dividend Don. Now, you do not collect the dividend on Meta, Nvidia, Tesla. Those are my top 3 dividend tickers. You won't collect the dividend if you don't own the shares.
Right.
Now, that's a pretty huge miss on Nvidia, because they pay 1 penny a share. So you're essentially missing out on $1 per quarter per contract. And,
it's not BITO or BITO. That one
yeah,
that one's
exactly.
crazy.
Yeah, that's $1.50. Now I can understand that one, but yeah, no, there's no real attachment to it.
Yeah.
So okay, so let's bring it back to the original risk of you're in these shares and it's going down. Is all we're doing kind of managing our strike price, moving it down. Now it's really cool, by the way. So you own it at 118, you sell a contract for $1 while things are fine, right? Now that pans out just fine. You keep the dollar. Technically, you own those shares at 117. So it's really ideal if you can keep your strike price above your average. Most brokerages don't do this. E-Trade actually did do it for me when I had the E-Trade account. Most people just track an Excel document. I own it here. I collected a contract for this much. We're going to subtract it off that. Because at least worst case scenario, this thing turns on a dime and absolutely sends it up and your shares get called away. You didn't lose. And I like being in those positions. I forgot where I was going with that. I hate doing that, getting so far into a rant. But like, I feel like it's gonna fork out in like 4 different ways. Like, which way do I take it? Then my brain just freezes. It's really cool if you can monitor that, just emotionally. You don't. it's not ideal to be in management mode. You buy it at 120, it sells off. You sell the 112 strike. Next thing you know, it pushes up to 118. Management mode, it's not that it's not fun, but you are going to collect a few dollars. For like the last contract was $143. You're going to go from $143 to probably 40. So it's not fun to be in. There's a lot of, when you're going to look back, wasted time. So it's not ideal to put yourself in that position. There's ways to avoid it. There's just ways to manage it if you get caught in that scenario.
Yep.
But the last thing I want, or maybe not the last, maybe you have more. The one more thing I wanted to touch on is there's no such thing as a home run. Remember, it's base hits, and I think what people do is they get all googly eyed on, I'm down $1,000. This contract will pay me $300 right now, so they're $3 out of the money, begging to be in trouble. But all they're seeing is, I need to have more money now to make up for this loss that they haven't locked in.
Yeah, I'd rather spend more time hitting the base hits, getting a little bit at a time during management mode.
Yeah,
and just dig myself out, and eventually it works. I mean, we've done it numerous dozens and dozens and dozens of times.
Yeah, well, this whole strategy is basis. There's no such thing as a home run. You are not, like, we were holding that bat just to bunt the ball.
Yeah.
You are not. That ball is not going to bounce off that bat and go into the parking lot. No matter what you think is going to happen, there will literally never be a home run in this play.
Yeah.
It's an income strategy, not a trading strategy, and there's a very big difference in that.
Yep.
So if you ever are, I guess that would be my takeaway, is if you ever look at this thing and that could be a home run, just know something's wrong with that play. You just haven't found it yet.
Now, the good thing is these base hits, these little bunts, they add up over time.
Oh, yeah. Just take a regular 9-inning baseball game and imagine every player takes a base.
Mm-hmm.
Versus Sammy Sosa comes out, or Babe Ruth. You're one player in rotation, smacks into the parking lot. Congrats. There's your home run. Hopefully the bases are loaded before they came up, or you might just get one guy making home run. Cool on your 1 point. That's fantastic. But imagine every player, 9 innings, base, and just keep scooting the next one up. Eventually it's just play. Just point after point. This is definitely the tortoise versus the hare. And except this tortoise is balling and in a 24 karat gold shell.
That's right.
And the hare is real cool and fast, but he's also he's just begging for money. That's really all that one is. And the tortoise ends up eating the rabbit and using its lucky rabbit's feet, and has those hanging around his neck.
And you went dark.
I'm just saying, if I was a tortoise and I heard about a rabbit's foot, I'm seeing 4 of them right there, and this annoying thing in front of me. I'm gonna get those 4 lucky rabbit's feet. All right. So what's our takeaway?
Takeaway is just know the risks.
Mm-hmm.
If you're interested in the wheel strategy, we teach it, but we also teach the risks. We teach you how to do stuff conservatively, so that way you're not getting in trouble as much. Mm-hmm. That's kind of the takeaway.
Yeah, my saying on there is just, I would rather collect children's allowance all day. You might think it's pennies compared to that guy on Instagram that showed you his 3,000,000% trade. Tell him to do that again. And if he posts that 2 days in a row, I guess go follow that guy. I would rather collect a children's allowance, pennies, and not manage it at all, versus have to do, like, I would rather paint the ceiling with my brains in a 12 gauge than stand there and look at charts all day, every day. Like, and I'm even a trader. That just doesn't even, that's boring, staring at charts. So I got the income coming in. I can use that to play some trades. I do all my planning at night. And the Patreon group is where I give the best not financial advice, relationship advice. And Mike occasionally goes live Monday through Friday, or like Monday, Wednesday, Friday.
I go live Monday, Wednesday, Friday, and I post a weekly top 25 list of puts that we look at to generate the plays that we want to take each week.
Yes, that's a put scanner for an ROI kind of thing, right?
Yep.
Yeah. So it's not just we're going to sell the same puts over and over again, but if you have the cash and you're going to, because again, selling those puts is just a cash play. It's just using your money to work for you. Why not get the most money?
Yeah, and basically what we've done, we converted it into a percentage based on the capital that you're putting up. Mm-hmm. So that it makes it really easy to compare any stock to any other stock, and not have to worry about the cost of the stock. So a $20 stock versus a $50 stock, you know what percentage your return you're going to get, based on the capital you're putting up.
Yeah, so to make that simple for the quick example, because people they used to love to hate on me for Ford. I'm like, just sell a Ford contract. It's $1,100 and you make some money. And they're like, nah, it only pays $10. I'm like, go ahead and sell Tesla. But so imagine a $50 stock versus a $25 stock. Now you could sell one $50 stock contract or two $25 stock contracts. And the two contracts will end up paying more. I'm just saying in this example, and that's what would show up higher on the list. So you might collect less, but just think of how many contracts you could have in that scenario.
Yeah, so we've made it real simple.
Yeah. So if you want the relationship advice, you can find it on the Patreon. If you just want all my plays, that's tier 1. Tier 2 is Mike. And I love the way the Discord's set up, because there's a chat you can join. But there's what we don't talk about is now I post in the growth account. It's called growth account. You post in income alerts. What's yours called?
Income and the investment alerts.
Okay. Now you can actually go into our Discord and turn just those on. That's why they're separate. So you can turn on the alerts just that. So you only get notified on that. If you don't want to hear me talk in the chat all day, you can just listen to Mike. But I thought that was cool because I'm so new to Discord, which is weird because I've been on it for years. But I thought it was cool. You could have that feature of they can just turn it on and say, hey, notify me when this happens.
Yeah.
So anyway, that'll be the top pin link in the description. Mike, do you have anything else?
No, I think we're good.
Sell the 75 strike call on NVIDIA?
No.
You'd make a lot of money.
You would make money. Not doing it.
All right, we'll wrap up here. Make sure you guys are following along on this series. And maybe you're not a shorts person, but I've been posting shorts. Just quick on, this is what I did. This is how the play planned out. Like in the beginning of the week, I sold this call, and there's another one that's about to pop out on, I made this much on the call. So make sure you're following along with these, because we're trying to make this so up to date, not interactive, but I'm trying to fill in every gap and answer every question while doing it in real time. So it's not just here's the video lessons. I've done a million rants, and I've talked about times, but they sometimes they were right then and there. Sometimes they were just old experience. So I want everyone to follow along so we can just fill in these gaps right now. So anything else?
I'm good.
All right, man. We'll see you guys in the next one. Have a good one.